And they took all that money and they in essence corrupted everybody they could, right? So you give 45 million to block, right? $45 million to what, a handful of journalists. What could go wrong, you know?
Hey guys, welcome back to Let's Talk Crypto. In today's video we have Michael Saylor, Executive Chairman and Co-founder of MicroStrategy, talking about what caused FTX to collapse, exposing the FTX CEO Sam Bankman-Fried, and why regulators haven't done anything to stop these crypto scams. Let's listen to Michael Saylor, as he takes a look at 2022 in retrospect, sharing both the negative and the positive aspects of the year as well as his predictions for 2023. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
There is a stigma attached to related party transactions in public companies. Rightfully so, because Alameda was a related party to FTX, and FTT was a related party. So Sam Bankman-Fried is the issuer of FTT, is the owner of Alameda, a hedge fund, and is the operator and owner of FTX. Those were three related parties. The reason that there's a stigma is if you took FTX public and you said, by the way, FTX accepts FTT, which is a related party issued token, and it does business with Alameda, the question that a skeptical investor would have is, well, since the same person controls all three, is it possible that he actually wired the systems to give himself an advantage? And if it turns out that Alameda has $1 billion trading loss, will Sam Bankman-Fried, the CEO of FTX, liquidate Alameda in order to protect the interest of the other customers? Or will Sam not liquidate them to protect his own interest? He has a conflict of interest. You would never want the CEO of a bank to be issuing loans to a private company that they owned, right? I mean, like, if it turned out that the CEO of JP Morgan was issuing $1 billion loans to Jamie Dimon, real estate development company, right? People would just lose it. But it really makes you angry when you read about, say FTX that collected billions and billions of dollars, but never bought the Bitcoin. They borrowed from BlockFi and, borrowed from Voyager and probably borrowed from Three Arrows, or they borrowed from anybody that would have made a loan to them. And they took all that money and they in essence corrupted everybody they could, right? So you give 45 million to block, right? $45 million to what, a handful of journalists. What could go wrong, $15 million to one influencer who will remain nameless that everybody knows, and and then you give it to every politician on both sides of the aisle, and then you give it to all of the academics. I think it'll be probably 3 to 5 years before we know the extent of that corrupt money. But I don't think that there are many people that weren't tainted. They went to pretty much every crypto influencer, every journalist, every politician, every entrepreneur, everybody every educator, everyone that would take their money. They invested something in hundreds of things, right? Hundreds, it's hard to figure out who in the industry didn't end up with some of that money. I mean, Sam pretty much created that money in 12 months, maybe 18 months max. In order to create another $1 billion, he just needed to manipulate the price up $3 a token. How hard is that? Not hard at all. He basically took the money from his own customers off the exchange, traded it with himself, manipulated the price up $3, declared $1 billion worth of earnings, and then went and spent it. And how he spent it, he bought everybody.
Although it's heartbreaking that so many people got scammed and lost their money, Saylor believes the carnage we saw in crypto was necessary for the industry to mature and for people to realize the difference between Bitcoin and the rest of the crypto tokens. What most investors can't figure out is, where were the regulators? Were they sitting on their hands? Did they know? Or is there more to this story?
I guess the positive is we got lucky that FTX blew up because they were very close to bribing, or corrupting the entire establishment, right? We'll see just how far they got, but I mean, some of the bills in Congress, they were driving to get light regulation in DC and then funnel crypto exchange fees into the regulators in order to addict them to more counterfeit crypto money. I think it's been a brutally painful year, one of the more difficult years, but it's a necessary rite of passage. If the regulators won't clean up the industry, right? A lot of people, I don't know, for whatever reason, they think regulation's a bad word, but if people are running through your neighborhood, shooting the children and burning down the houses and stealing your cars, and murdering your dog, you would say, where are the police? Why don't they show up, and install some order? The real issue here is the regulators need to enforce the law. And what you've got is a lot of people that are lying, cheating, and stealing. And the regulators have been very slow, very ineffective in enforcing ethics and the law in the industry for whatever reason. It seems like they just don't really want to, they don't feel that they have the authority to regulate offshore entities, right? I mean, that's been the big blind spot. I mean, FTX was in the Bahamas, and so there's this vacuum of power, right? A blind spot where the US regulators don't feel like they have authority to regulate offshore entities. I can't tell you why we don't have a clearer regulatory regime. It's not that constructive for us to discuss why we don't have it. Why don't we just talk about what we should have, right? I don't know how we get there, but if you wanted the industry to grow, if you said, what's best for the civilization? Let's start with what's best for the human race. You could imagine digital commodities circulating, of which the greatest global digital commodity is Bitcoin. And so if you were able to legitimize Circle or legitimize Tether and allow other banks or other issuers that are trustworthy to issue some sort of digital currency, then I think that market would grow by a factor of 100. It would explode. So that would be a good thing.
While many investors are still very skeptical and afraid of the industry, Saylor is very optimistic about the space and the future of Bitcoin. Looking at 2022 in review, he shares the most positive aspects of the year and his predictions for crypto in 2023.
The most positive thing of the year is the emergence of Bitcoin as the institutional grade digital asset and the clarity that has arrived to the mainstream media and to institutions and to the government that there's one crypto asset that's a digital commodity. I think we went in 2 years from people on Twitter lamenting the lack of mainstream coverage of Bitcoin. There was no coverage at all, to a point where we saw 5 stories in a single day on the front page of the Wall Street Journal. So a lot of mainstream coverage. And the one thing that I think is probably just the most auspicious is that there seems to be broad-based consensus on 2 things. One thing, that digital assets are here to stay, and that the entire world needs to embrace the crypto economy one way or the other. And the other thing is that the one crypto commodity that exists in the world that's universally agreed upon is Bitcoin. So that being the case, Bitcoin is the most stable thing in the universe. And if we're not banning it, then it's only going to grow. Find ways to educate more people on Bitcoin and find ways to acquire more Bitcoin. 2023 is going to be a great year. We got a lot of heavy lifting done in 2022. And I think we're gonna see the benefit of that work in 2023.
What do you guys think of Michael Saylor's perspective for 2023? Will we see Bitcoin finally bottom and the next bull run begin? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.